Hello, it is Monday, the 19th of May, 2008. This is Brian Shannon from AlphaTrends.net, and we had a pretty volatile day here as the market's doing battle. The S&P 500, that is doing battle with this declining 200-day moving average. So we've seen a good rally from the March lows, and here we are at what's supposedly a seasonally slow time of year. That is, you know, the old adage, sell in May and go away. And I'd linked to someone who did some research on that last week on my blog, so go ahead and check that out. But anyways, the S&P 500, as we know, broke this downtrend line, and it still remains above there, so we're bullish. It's easy to look at this one-day, intraday reversal and focus on the 1-minute action and say that, wow, this market really fell apart. But this morning we had a really nice uptrend in here. It came down to that VWAP and then broke down through it, consolidated, and then we saw another little panicky decline here. And here's what we're seeing is that the volume is starting to increase on these downside moves, followed by low volume consolidations in here and low volume, relative rallies. So you want to be a little bit careful in here again, as we are at this longer term inflection point that is really seen more clearly on the weekly time frame. And this is, not going to be the exact level that is the 200-day moving average, but more of an area in here, which is, 143 to $145 on the S&P 500. But we are, on the daily time frame, we're still in a good uptrend. So we've got mixed messages from the longer term market and the daily time frame that we see in here. If you look at this trend line, it matches up pretty much with that 50-day moving average, and my computer slowed down and didn't let me draw that properly. Something strange is going on with my machine. But anyways, this 50-day moving average is still, a possibility, I think, within the next couple of weeks to get down towards that level. There's nothing here indicating that it's due for a larger decline. We do still have this pattern of higher highs and higher lows, and, it's not going to be troublesome until we get back down to that important level near 138. Breaking below 138, then we might have a problem. But, short term, this market has come a long way quickly. I had been pointing out that we had this inverted head and shoulders pattern, and the neckline there was close to tested today at 142. So 142 is going to be, I think, very important for the rest of this week. That's going to be kind of the main level of importance, I think, because that's where we'll see this 5-day moving average meet the market as well. And we've got that prior level of resistance that had been tested 4 or 5 times before it broke last week. And we've seen these higher highs that are bringing the market up to test that 200-day moving average. So it's time to be pretty either conservative and stand on the sidelines, or you've got to be super aggressive. I showed my order book for one of my accounts and the results of that today, and traded very aggressively this morning. So take a look at the AlphaTrends.net to see those trades, and it shows exactly what time I entered and exited and the size and that sort of thing. The S&P 500, though, again, we're looking at 142 is going to be an important level. It's, we broke this little trend line in here briefly late in the day. Now let's see if this market develops a lower high and then makes a lower low. If that's the case, then you want to start being a lot more conservative. We still do have a rising 5-day moving average, so it doesn't mean go out and sell everything short. The market gets tricky around these larger inflection points like the 200-day moving average. So just trade either conservatively on the sidelines or very aggressively. The IWM is still holding above this 73 level, of course, and it continues to do battle with the declining 200-day moving average. You can see that it's been unable to breach it to the upside, but and then on the weekly time frame, we've got this larger level near that 75-ish area. And again, support and resistance are only known after the fact, and they tend to be more of a general level of distribution rather than an exact figure or number. We were looking at this trend line last week. I think that 72 will continue to be important in here. The level that I'd said actually that was more important was probably that 72.75. So continue to keep an eye on 72.75. Breaking below that might put this move down as a failed breakout past the 73 level. So I think getting below and holding below 72.75 could bring about some larger bout of profit taking from people who've been long for a while in this market here over the last couple months as it's experienced such a nice rally. So just again, more reasons for caution. 73 to 72, 75 to 73 is going to be a key level. The let's take a look at the semiconductors. This group is continuing to act strong. It's holding above this trend line here on the 10-minute time frame, and you can see that it's been stair-stepping higher. The more important level of potential support for this market is about 32.30 or so, and then we've got probably about 32.75 below it, but or above that level. We've got this market above the 200-day moving average. Wouldn't be unrealistic to see it come back down and see if it can hold above that the way the NASDAQ has recently. So I think that this you want to be careful with the semiconductors. Keep your stops tight if you have cumulative profits in there. The NASDAQ 100, as we know, this market has gone up to the key retracement level, and it's doing battle with that up in there at this 2/3 retracement level. So perhaps that's where why we're seeing a larger battle in here being fought right now. But this market was the first to fail today. It broke below that VWAP and then the support from earlier this morning here at about $50.15 or so, and it sold off pretty hard. Much harder than the S&P, and it's clearly been the leader. I mean, the S&P finished up today, whereas the S&P finished up 0.25%, whereas the NASDAQ finished down 3/4. And you can see here that this is not what bulls want to see, which is aggressive selling followed by a bounce on diminishing volume and another bout of heavy volume on the downside. It's only on the 1-minute time frame that you can really see that too well, so you don't want to read too much into it because we're clearly still in a strong uptrend. The more important level of support for this market, I think, this week is going to be, breaking below $49 a share. Breaking below 49 probably brings us to that important $48 level, and that 48 is also where we see the 200-day moving average. So, this market has come pretty far real quick. We've seen some really crazy moves and some speculative names recently, and they started coming in today. Some of the solars did. That usually, when the speculative levels get that high and stocks, are moving so rapidly and gains coming so easily, like they have been in SOLF or CSUN and that sort of thing, it often marks a short-term turning point because the emotional money is in there, and it's just a time to be very cautious.